Hello everyone, welcome to another video and I'm your friend Bharath Shankar. So recently a major negative news has emerged. A massive discrepancy has been found in IndusInd Bank's derivative portfolio.
Respect to asset and liability accounts of derivative portfolio over there.
As soon as this news broke, the stock crashed more than 27% in a single day, the biggest intraday fall ever for the bank. And even now, IndusInd Bank remains in focus while its stock price dropped over 35% in the last month. Even now, investors are scared, investors are skeptical, and they have some big questions where they want to know what went wrong. And after all this has happened, can the bank recover from this? And an even more important question is, are there more hidden risk or was this just a one-time issue? So let's break it all down in this today's video. But before we go forward, if you're liking the video so far, you can hit the like button and like the video, and also leave a simple thank you in the comments as well to encourage us more to make such kind of videos. And also you can join our member community to receive exclusive invitations to webinars where we talk about fundamental and technical analysis of stocks and stock market, where you can learn a lot about stock market and stock analysis. And to join the member community, you can click on the join button, or I have also given the link in the description. So to begin with, just imagine losing more than 25% of your capital overnight. Not in some penny stock or a speculative company, but in a well-reputed, well-respected bank backed by Hinduja Group. Sounds terrible, right? But that's exactly what happened with IndusInd Bank investors who trusted the management. Because after this massive crash, the bank has lost its position as India's fifth largest private bank by market cap, and IDBI Bank has now taken the fifth spot, pushing IndusInd Bank to the sixth place. And currently, IndusInd market cap is very close to Yes Bank's valuation. And if the stock falls further, its market cap could even match small financial banks as well. Because of all these reasons, it's really a heartbreaking situation for the investors right now. And now, if you are thinking that the investors are worried because IndusInd Bank has lost market cap, then you're totally wrong. That's not even the real concern. Because if you see, in the stock market, such a huge market cap loss usually happens due to economic slowdowns, business decline, or profit drops. And when conditions improve, stocks also recover over time. But IndusInd Bank's fall is different. Here, it's not about slowdown or profits. Here, it's about loss of trust in the management and the corporate governance. And that's what makes this crisis far more serious than just a temporary market correction. So what exactly happened? Let's break it down. So to begin with, you have to understand banks deal with foreign currencies to manage risk, as India's currency fluctuates rapidly. And to protect against these risks, banks use derivatives, futures, and options. And this entire process of risk management is called hedging. But here is the issue. IndusInd Bank's treasury department is divided into two teams: internal trading desk and external trading desk. And here is the problem. The external desk followed the mark-to-market or MTM accounting method, while the internal desk used a different method. And even the CEO had admitted this practice had been going for 7 to 8 years in the bank. And now here some might ask that what is the problem? This happens in a lot of organizations. Different teams use different methodologies for accounting based on the requirement. So what's the problem here? So in September 2023, RBI issued a circular forcing IndusInd Bank to stop internal trading and rely only on MTM accounting. And to be in compliant with this new RBI direction, in October 2024, IndusInd Bank conducted an internal review. And here is the problem started to surface in bits and pieces. During this review, the bank discovered discrepancies in the way its derivative portfolio was accounted for. And this accounting mismatch led to false impression of profits, which inflated the bank's net interest income and overall profitability. And now here is what is concerning the investors most. IndusInd Bank officially disclosed this issue to the public in March 2025, nearly 5 months after discovering it internally. And this is what has raised the investors' concern, where investors want to know that why there was a delay of 5 months before the bank disclosed the problem officially to the public. And when it was finally disclosed, what did the bank disclose? On March 10th, IndusInd Bank issued a notice where it is mentioned that due to these accounting errors, IndusInd Bank is facing a 2,100 crore loss. And bank also said that this loss would impact nearly 2.35% of bank's total net worth. And as mentioned earlier, CEO admitted this accounting practice has been going for past 7 to 8 years. This means profits shown in the last 6 to 7 years were artificially inflated. And whether it was done knowingly or unknowingly, well, we will know once the external audit is done. Wait a minute, external audit? Yes, you are right. It's not over it, because following the disclosure, RBI stepped in and now an external audit is underway to assess the full impact. And most importantly, this 5 months delay in disclosure of the issue has raised concerns among investors about the bank's transparency and corporate governance. And obviously, after this accounting error was exposed, a major question arises: does this mean that all the profits earned over the last 7 to 8 years were heavily inflated? And a simple answer to this question is absolutely not. Let's look at the actual numbers. Over the last 7 to 8 years, IndusInd Bank reported profits ranging from 3,300 crores to 7,200 crores every year because the bank has consistently earned strong profits. So while this accounting issue inflated a part of it, it didn't wipe out the entire profitability. Because if you see the actual numbers, due to this error, IndusInd Bank's total gross profit was overestimated by 2,100 crores. And this led to net profit being inflated by 1,500 crores, which means every year profitability was artificially boosted by 220 crores. And this 220 crore per year, of course, it is a big amount, but no matter the size of the amount, artificially inflated profits are never good for the company and it's always bad for the investors. No doubt about it at all. But having said that, if you look at this amount from the point of financial numbers, then 220 crores per year is a small fraction of bank's total profits, which means the majority of the profits still seem genuine based on the internal audit data provided by the bank. However, the real concern here is not just the numbers, but the loss of trust in management and the corporate governance. And that's what investors need to worry about. And now, after knowing all of these facts, you might say that, okay, so it's just the loss of trust in management and corporate governance. That's it, right? There is no major financial impact on the company, right? And you might also think that in the next quarter, the entire 2,100 crore loss will be deducted from the net profit and the bank could report a one-time loss and then it will be business as usual for the bank, right? And based on this logic, you might also think that if that is the case, then why did the stock crash more than 27%? Which is 10 times more than the actual financial losses from the accounting error. And you might also think that is it just panic selling or is it an opportunity for smart investors? So here are my thoughts on these comments. Before jumping into any conclusion, we need to understand why the market has reacted 10x or 10 times more than the actual impact. So first of all, you have to understand that so far all the impact analysis has been based on the internal audit conducted by the bank itself. But an external audit is still underway. And in this external audit, if the auditors uncover even bigger losses or deeper problems, the situation can get worse. And this is the fear that is haunting the investors right now. So are there more hidden problems? We don't know yet. The issue might be limited to this accounting error or could be more hidden problems. We will only know after the external audit is completed. But right now, investors are haunted by a familiar fear. They have seen this before with Yes Bank and RBL Bank, where one exposed issue led to a series of hidden problems coming to light. And that is the biggest fear right now. And these are the questions that are worrying the investors, that what if IndusInd Bank has more undisclosed issue? What if the external audit ordered by the RBI reveals even bigger problems or bigger shocks? And this uncertainty is what has triggered panic selling, leading to a 27% stock price crash, which is 10 times or 10x the actual financial losses from the accounting error. That is why investors are extremely nervous about what's coming next. And also, this isn't the first time IndusInd Bank has been caught in a controversy. In November 2021, whistleblowers, including senior employees of Bharath Financial Inclusion Limited or BFIL, a subsidiary of IndusInd Bank, raised concerns about the practice of evergreening loans. And now some of you might ask, what is exactly evergreening? Evergreening is a practice where new loans are given to defaulted customers to mask non-performing assets or NPAs. And evergreening also artificially inflates the loan book and revenues, creating a false picture of financial health. So the whistleblowers alerted RBI and the bank's board, exposing serious governance lapse and accounting irregularities. And soon the bank acknowledged the issue but blamed it on a technical glitch that occurred on May 2020. And IndusInd Bank admitted that around 84,000 loans were dispersed without customer consent but claimed it was an inadvertent error not a deliberate evergreening. And to address these allegations, IndusInd Bank even hired Deloitte for an independent review. And after investigation, what did Deloitte find? So this investigation found procedural lapse, but it did not find or uncover any intentional fraud or financial misrepresentations. So basically, the bank was cleared from the allegations of evergreening loans. And despite all this clarification, the incident shook investors' confidence, raising serious doubts about bank's internal controls and corporate governance. And now, just a few years later, another major financial discrepancy has surfaced. And now investors are asking the same question again. Question number one: are IndusInd Bank's internal controls and corporate governance still weak? And question number two: if one issue was uncovered now, could there be more hidden problems? And this is why investors are worried, because in a financial institution, when trust is broken, it's very hard to rebuild it. And that's what makes this situation far more serious than just a one-time accounting error. And now for investors and market, if this wasn't concerning enough, here is something even more worrying: the sudden exit of top management and RBI's unexpected decision. So the bank CEO, Mr. Sumant Katpalia, requested a 3-year extension to continue leading the bank, but RBI only granted him a 1-year extension instead of the usual longer term. And why did RBI do that? The reason could be the ongoing issues, or the reason could be something else as well. And then comes another shocking development, where the CFO Govind Jain resigned right before Q3 results, just a week after the issue was discovered in October. And a CFO resigning right before a major financial crisis is never a good sign. Clearly, a lot was happening behind the screen that shareholders had no clue about. And because of these series of developments, now investors have even more questions. Did the CEO and CFO already know how serious this issue was? Was the exit of CFO a sign that more problems are yet to come? And why did RBI limit the CEO's extension? Are they also skeptical? And along with these questions, when top management starts leaving just before a crisis, it always raises big red flags in the mind of investors. And this is exactly why investors are on high alert right now. While the investors are panicking about the future and the stock price is crashing, there is one group that isn't backing down, and that is the promoter group. Because despite all these challenges, the promoters remain in full support of the bank, and they are very confident that this is just a temporary problem for the bank. And in fact, they are even considering increasing their stake. Because Hinduja Group, the promoters of IndusInd Bank, recently made a very bold statement where they said, quote on, "This is an opportune time as a promoter to increase stake. If this is the time, at this price, we would like to increase stake." This means promoters see value in the bank even in this crisis. But still, investors are skeptical. Is this a genuine vote of confidence in the bank's future, or are they just trying to calm the panic in the market? Because in general, in stock market, when promoters increase their stake, it is often seen as a positive signal. But in a situation like this, investors are still skeptical, and investors are still waiting for more clarity from the external audit. And of course, in the external audit, if the auditors find that this was just a one-time issue and there are no further hidden issues, then it could be a big relief for the investors. And if it is not, then you know what comes next. So what do you think? For IndusInd Bank, is it just a temporary problem, or is there more troubles ahead? Let me know in the comment section. And also, if you like the video, then please hit the like button and subscribe to the channel. So thank you so much for watching. I will see you in the next video.